All right, guys, it's Paul Singh, the Market Speculator, with the trade report for Tuesday, October 30th, 2018. I got my dates right. I was a day ahead. I think I was a little too excited about Halloween. So Apple's report is actually not till Thursday, and it should be after hours. So we actually won't feel it in the market until Friday. So remember that. I think I was a day ahead on the Apple news or the Apple reporting date. But let's get to the market here. You guys know I took two of my shorts off, Baba and the SPY short, and I kept the SQQQ on. Now, that doesn't mean I think the market is going to bounce big here or anything. We were just extended enough to the downside. There were big enough wins. I didn't want to give all our profits up in case the market bounced. So keep the Qs on the short. Baba, I had to take off, and let me pull that up here because earnings are later in the week. We got the big flush here, which we had kind of been waiting for, and actually flushed out even more. I got out at what was it, 137? At the bottom of this range. Obviously, I wish I would have held on a little longer, but it was a profitable trade. That's good. But when earnings are coming up that close, you just have to get out and take your profit as it's coming up. So we got out of Baba. It's a good trade. We continue to win in a difficult market, so that's good. SPY here. Now another big flush down, and let's get into the intraday real quick because I want to hammer home this point. Don't get excited about the intraday moves. Again today, I got a ton of emails intraday in the morning asking about this. Remember, we don't really care too much about these opening pops and drops. Unless we take out key levels. Remember, that's the key for us for trend changes. And this is from a swing perspective, not a day trading perspective. We need to see the 9 get taken out, or the 200 day, or the 50, and then on very impressive moves with market breadth and all that good stuff. A morning pop doesn't really change much for us, and typical of a corrective market. And I'm calling corrective instead of bear, but I wouldn't say we're really in a bear market yet, but we are down 11% from the top at this point. So this is very common. You get the open and then it does not hold. And we saw that later in the day, it crossed down. Now, there was some interesting buying, and look at the volume here. So this is the intraday. Usually we don't care too much about intraday moves, except in in volatile markets, when something significant happens. Look at the amount of green buying, essentially the most volume of the day, aside from, the most volume of the day came in right at the end of the day on a pop from 260 to 263. I mean, we're still down 0.55%, but this was kind of significant. Now, it doesn't change our overall outlook, but it does lead us believe, and we got the big tail here, that maybe like this tail here, we get a little bounce, and it could end up being another dead cat bounce that sets the next move down. Remember, in a bear market, they don't go straight down. We're going to contend with these bounces like this, and if you're shorting, you have to be able to deal with some of these and be willing to say, you know what, I was sitting in profit, but I want to hold on for a bigger move. And if it ends up not working out and I lose that medium-sized profit, that's okay. That's going to happen. But we did lift a couple of our shorts today, the SPY specifically, and we kept on the Qs. I do still think even if we bounce, my bias is still that we're going to eventually test the February lows, or at least the April lows. And as usual, when we have a bias like this, we will change it on a dime. I'm not married to it. I don't get points for the bias. I get points for my trades. So, if we cross the 9, I'll start to shift that. If we cross the 200, I'll start to shift that. And you're going to hear the same thing until this happens. You're basically going to hear the same stuff from me every day. Qs we left on, and it did bounce at the end of the day. And we'll take a look at the intraday real quick. We're going to see pretty much the same thing as SPY. The opening pop, the failure, the close from green to red, and then holding that level, and boom, the significant move down. We still did close. Even with that pop, the Qs were still down 2%. And then IWM, a little actually more impressive, which is surprising considering that IWM has been beaten down so much. And that's something that we will pay attention to, because we know we really want to see IWM do well. It is very beaten down. If I do play a bounce, I think the first one I'll go to, just because it's so beaten down, will be TNA, which is the leveraged ETF for IWM. So we'll watch the 9 here. I'm not going to do it unless it breaks the 9, and we're still about 6 points away on TNA. On IWM, we're probably like 3 points, 4 or 5 points away. So that's analysis of the market. Now let's get into some sectors. We talked about retail being a relative strength area, and we got the same thing again today. Retail actually closed green. So we're getting good at predicting this stuff. We were already talking about retail holding up well, and look at that. It was green today while the market was red. Now, a couple other, this is the main S&P retail. We can also look at the online retail, which is obviously going to be more tech related. It was down. Amazon was hit hard today. So that part of retail is not good. So for retail is so broad, it's good to kind of break it down and see which retail we're talking about. And the retail we're really talking about is stores, like apparel stores, the big box stores, Kohl's, Macy's. We'll get into the list in a second. You guys know already what we're watching. So iBuy, and then another one to watch is RTH. I'm not sure specifically what it breaks down as. Let's just look at a few of the stocks in here. Looks like they've got a mix of everything: Costco, grocery stores, big box. Orly is an auto parts, Walmart, Home Depot. So it's a mix, and even Amazon online retailer. So this is a mix of a lot of different kinds. And it was up. It was down only 0.32%, which is still better than the market, and put in a nice hammer over the 200-day moving average. So overall, retail strong, and we added a couple of more retails to our list. Financials were strong. 0.87 green, again, a sector that was green today. Goldman Sachs was green, Bank of America green. We could go through the list of some bank stocks. Why don't we just do? I haven't even done this because I'm not going to trade them, but let's just take a look if there was anything like that really would wow us today. Nothing really. Some nice little bounces, but nothing we're going to trade. But just still something to watch. And if they really do improve, then maybe we trade it later. So that's what we're looking at. And there were some select software. Now, software overall is still, way down here, but let's look at it this way. Software is a tech area. And while the Qs were down 2%, software was only down 0.71. So actually software held up better than tech overall did. And I noticed that in some of the stocks. I added Team to our relative strength list. It was green today. I added Cyber to our relative strength list, and PayC, even though it was down, it was red today. It was only 0.15, but I think if it crosses the 9, it could really run. So we're adding some software stocks as well. And let's recap what the FANGs did today. Facebook crushed, Netflix crushed as well, down 5%. And this is really weird with Netflix because the earnings were so good and it just continues to get crushed. So I think at some point we're going to get a really good play at Netflix. I still like it. I put out that free blog post for public viewers, and I talked about Netflix and Amazon being my favorite ones. And it's kind of funny that they both got crushed today. But I still do think they're the best of the FANG stocks outside of Apple, which is very strong. It was only down 1.8% today, and we know it has earnings come up and has held up well. New additions to the relative strength focus list. Buckle, apparel store, retail was very strong today, up almost 4%. Twitter is an earnings breakout play, and we want to see it cross the 200-day moving average. I think I will get in, take a little shot there if it does get up over the 200. And I already talked about Team, which is software. And then the rest of our focus list basically remains the same. We're all watching the same things. If I do decide to take a bounce play, now remember, these will be quicker trades. We won't be trying to ride out a big trend because we don't see a trend in play yet. But even within the bear market, we can trade bounces. I would probably look to TNA, the IWM, or maybe one of our relative strength areas as well. Alta is one of my favorite relative strength stocks. All right, guys, so this is coming in the evening. The first half hour to hour of the morning, I might be out. So actually, let me go over this. SQQ, 1555. We entered around 1280 something. So let's make sure we lock in 2 points. So I'm going to have a hard stop in at 14. Let's make it a little lower than that, 1465. All right. So we'll give it some room tomorrow morning. If it pulls below 1465, even if you don't get alert, you should know to be out because I won't be there. I might not be there in the morning. All right, guys. So that's trade report for tomorrow morning.